We now move on to the revision test paper for the CA Foundation September 2025 examination. We have taken up inventory valuation. They have given us in this present problem that the inventory that is given to us at the start of the year. What are we required to find out? What is the value of the inventory at the end of the year? So the value of the inventory on 1st April 2024 given to us is 10,50,000. When we have read through the problem, we note that it consists of abnormal goods. The value of the abnormal goods that they mentioned to us was 1,65,000, but 60,000 was already written off. So what is the value of these abnormal goods that are still remaining in the stock? That is 1,05,000. So 1,65,000 less that was written off already. So the value of my abnormal stock was 1,05,000. So I have removed it from the opening stock. Why? Because these abnormal goods are sold during the year for 1,50,000. So this abnormal sales is reduced from sales. Now, the important point to note is that the stock was given to us on the opening date of the year, and I am required to find out the value of the stock as on the closing date of the year. So when we have this, at that time the purchases will be added and the sales will be subtracted, but sales will be subtracted at cost. So when I work this out, I find that the value of my stock on 1st April is 10,50,000. As mentioned to you, the abnormal value of stock still remaining in it is reduced. So my net value comes to 9,45,000. Then I'm making purchases during the year, 36 lakhs. And the manufacturing expenses incurred is 3 lakhs. That's why you need to know your concepts very, very clear. This purchases may be of raw materials. When I spend manufacturing expenses, only then it gets converted into the cost of my finished goods or the cost of the goods that I would propose to sell. So I have added the manufacturing expenses, 3 lakhs. So the value of my purchases of the goods produced is 39 lakhs. Next, I have sold goods. As I said, sales in the present situation will be reduced. The sales is 55,50,000. But as I mentioned, why? I reduced the abnormal sales. So my net sales comes to 54 lakhs. And as I said, when we are valuing stock, stock should always be valued at cost. Therefore, the gross profit, which forms a part of this normal stock, right, is reduced. So 20% of 54 lakhs works out to 10,80,000, and therefore my cost of goods sold works out to 43,20,000, and therefore the value of my stock on 31st March 25 works out to 5,25,000.